But I think we could be in for a very turbulent and chaotic next 2 years, not just in precious metals, but in the financial markets, in the stock market, in the bond market. And why do I say that? Friday, December 26, 2025, Monaco 64, home of alternative economics and contrarian views. So I hope all of you who celebrate Christmas had a great time with your family. And now on to the new year, right? But we still have about a week to go in the markets. Today, the markets in London are shut. It's Boxing Day. It's a bank holiday. So I would say things might be a little quieter in the foreign exchange market, but we're seeing gold and silver continue to surge ahead. And yeah, silver traded as high as 75.17. That's the spot price. Crazy, isn't it? I'm not surprised though. That teacup and handle that we broke through recently, that 45-year teacup and handle was such an important line in the sand. And I know it took 45 years to form, but all that means is that there's so much pressure and suppression stuffed into the silver price that once it broke through it back in October, it was going to be really hard for them to keep it down. By them, I mean the central banks and their agents, the bullion banks. Yes, it did a typical technical retest of that level. It broke back down below it, back to around, I think it was 40, just below 46. And then it just went berserk, and it's still going berserk. And there's talk as well of how the premium between the price on COMEX and LBMA and the Shanghai market is so big. Like you can get like $8 more for silver in China, in Shanghai. And why is that? Well, because the contracts in China are actually based on real physical metal. And it reflects the real price. It's real price discovery. And I'm afraid what that's doing, well, not really afraid, because I think it's about time that the COMEX and LBMA went the way of the dodo bird, right? What that's doing is encouraging people to take delivery, buy on COMEX, LBMA, and ship the silver and get a profit in China. And that's going to continue unless, of course, and the arbitrage, it's called an arbitrage, that will end once the price, the Western price catches up. But by then, we could be a lot higher. But as I said, I'm not surprised that after the break of that teacup, the top of the teacup, it's been explosive, because there's so much pressure, so much manipulation for so many decades, some would argue for over a century, of silver, that what it's led to is a shortage, a deficit in the last 5 years. Because when you keep the price of anything down artificially, you create shortages, because producers stop producing because it becomes uneconomic to do it. And that's what's happening in silver. But what I really want to cover today actually is a couple of things. The most important one is the Dow Gold ratio. And yes, it's also got to do with silver, because we can extrapolate from that. But I think we could be in for a very turbulent and chaotic next 2 years, not just in precious metals, but in the financial markets, in the stock market, in the bond market. And why do I say that? Well, I'm going to bring up a chart here of the Dow Gold ratio. I've looked at this many times before, and I've done videos on this, but it hasn't. It's been a while, and a lot of you are new to the channel. So it's always good to refresh. Back to the Dow Gold ratio chart. It goes back to like the 1890s, but I've got it from like early 1920s. And you can see that we have reset number one. And what was that? Well, that was after the crash of 1929. We had a bear market for like 4 years, or yeah, the market dropped. That crash was the initial move down, and then for 4 years the market kept going down. And by March 1933, the Dow Gold ratio had dropped to basically 2 to 1. The chart says that it was 1.9 to 1, but let's round it up to 2 to 1. And why is that a reset? Well, because it flushed out paper assets, the stock market, and it shifted the balance from financial assets to money, i.e. gold. And from then on, things started going, let's say the credit cycle started once again, started moving higher. And then and the Dow outperformed, of course, gold. But by the 1960s, I think it was 66, that Dow Gold ratio topped again, and then it started down. It was over a period of, how long was it? About 14 years, because it took that ratio up until 1980 to come down, right? It wasn't as severe and as short as the first reset. It was more spread out, right? And by 1980, and this was January 1980, from the chart as well, that ratio got down to 1 to 1. It says 0.99, but let's round it up again, 1 to 1. And then we've had actually a boom in financial assets ever since 1980, especially 1981, when bond yields topped around 15%, the 10-year. And we've had probably the biggest creation of money and credit and debt in the history, modern history, or recorded history of mankind. We've had many crises, many bubbles, and you notice that that ratio topped actually in late 1999, early 2000, around 45. And you could argue that we've been basically in a bear market in terms of gold for the stock market. Yes, since 2011, the stock market has rebounded. That's because the central banks learned a lesson, not a great lesson. They learned that if they wanted to stop what happened in 1929 to 33, they had to print and borrow and throw everything at it. But that's not natural, right? And now I think despite how long it took, you can't kick the can down the road forever. And I think, as you can see, this ratio is breaking through key support. We're around 1081 right now. The other thing that you can see from this is the time that it took, let's say, for this to happen. So we can extrapolate from 1933 to 1980, March 1933 to January 1980. Let's say that's 47 years. And I'm not saying this is going to happen for sure, but there's a high probability. There's a cycle here, a 47-year cycle. And I've spoken to you about this. So it's really simple. You add 1980, you add 47, to 1980, you get 2027. And that's why I said in the beginning here that we could be in for some turbulent, chaotic times in the markets, in the economy, geopolitically. But one thing I'm fairly convinced of, and of course, nothing is certain in life. One thing that I'm fairly convinced of is that the precious metals, gold and silver, are going to continue to outperform the stock market, the bond market, and we could by the beginning of 2027 be back to 1-to-1, or if you take what happened in 33 and 1980, you could extrapolate that we could be at 1/2 to 1. And what does that mean? Well, that means that you only need half a troy ounce of gold to buy one Dow Jones Industrial Average. Of course, you're probably asking yourself, what level do you think that's going to be? Well, it's hard to say. I have a feeling it's going to be very high for both. And why do I say that? Well, because I think we're going to see a currency event, and the dollar is going to drop massively, not just versus gold, but somewhat versus the other fiat currencies. And I'm not saying the other fiat currencies is the place to be. It's not. Gold and silver are, and hard assets in general, productive assets as well. So yeah, there are some other analysts out there. Bert Doman, for example, he was in the precious metals market in the late 70s, made a lot of money for his clients, and then in 1980 he told them, we need to get out because we're going to have a 20-year bear market, and they thought he was crazy. And at the same time, he told them after the bear market, there will be a 32-year bull market in gold, which if you add up 2000, let's say, to 32, you get 2032. And the way he got these numbers is through looking back at the historical price of bullion, not just in the US, but back in England, where the US is derived from, of course, the US prices. So what I'm trying to say here, I've got this 2027, he's got 2032. It could be in between. It would make that drop in the Dow Gold ratio less pronounced. But I think there is a chance, though, that we could see 2027 and that 47-year interval between resets. And all a reset means is that the whole financial system, the whole monetary system will be ready to once again start a new cycle higher. Believe it or not, a new credit cycle higher. And it might sound a little bit too soon because we are still in a huge everything bubble, but this collapse of the value of the Dow versus gold that I see coming, that is already happening, and a lot of people don't realize that. They focus too much on the fiat dollar price of everything, and I think that's wrong. And I think a lot more people are going to start using gold as the common denominator. So the other chart I wanted to show you is the dollar index, because we've been for the last few months, well, quite a few months here, because this is a monthly chart, for the last 6 or 7 months, dollar index has been holding on for dear life above this trend line, or right under it, or right on it. And I just noticed that it's created a bear flag, which is very bearish. And 3 times out of 4, bear flags come to fruition. One time out of 4, the market just rebounds. But I think this is pointing to more trouble for the dollar. What this is telling me here, and the target here for this move, this bear flag, would be around 87 by the beginning of April 2026. I don't think it would be the end of the bear market for the dollar versus other fiat currencies. But as you can see as well, in the long term, it doesn't seem to matter because the dollar bottomed just above 70 in 2008 and gold was just above 1,000 at the time. And here we are now at 98 almost, and gold's at 4,500. So what I'm trying to tell you, expect gold to outperform all currencies out there. And that's why trying to hedge dollar weakness with other fiat currencies is a losing proposition. The only reason I'm showing you this is that in the short term here, in the next few months, this could help gold and silver even more. And yes, so that's how I see things. Let's keep an eye on the markets today. Right now, as I speak here, it's just before 8 a.m. London time. We got spot gold at 4,510. That's up about 31 bucks. The high's been 4,532. So that's a new high, all-time high. Silver made an all-time high, as I said earlier, just above 75. Right now it's 74.70. And the rest of the markets are fairly quiet. Actually, the Dow futures, S&P futures, and NASDAQ futures are virtually, NASDAQ 100 futures are virtually unchanged. Let's see, other commodities, general commodities, crude oil. Yeah, that's still languishing below 60. It's at 58.35. High-grade copper is up another percent at 5.77. Yes, copper is doing well as well. And with that, I'm going to wish you all a very good weekend. Take care. Bye.